I'm going to discuss 4 ways to not have to pay a down payment while buying a house. And if you stay till the end, I'm going to give you a bonus 5th way. But first, let's destroy some misconceptions. The biggest misconception is that no money down means no money out of pocket. In reality, no down payment just means you're not paying anything towards the equity of a house. When lenders require a down payment, what they're requiring is that you put some skin in the game. They're requiring that you move money from your bank account into your new house, your new house-shaped bank account. It's still yours, but they do this to reduce the chances of you walking away if times get hard. The more money you have in that house-shaped bank account, the harder it is for you to walk away, no matter what you have to pay to keep it. The less money you have in that house-shaped bank account, the easier it is for you to walk away. So imagine you're the lender. Who are you going to lend money to? The person who has more to lose if they stop paying, or the person who has less to lose if they stop paying? So that's what a down payment is. It's the amount you have to lose if you stop paying. As long as you keep paying, you have access to it. However, there are certain loans that don't even require that down payment. But just because they don't require a down payment doesn't mean there aren't other costs you have to pay, called origination fees or closing costs. These include pulling your credit history to make sure you're a good borrower. In other words, you have a history of paying back your debt on time. Title fees and title insurance to make sure the owner doesn't owe any money on the property, and to ensure that the seller is the legal owner. And appraisals to make sure that the house is worth what you're borrowing. They don't want to lend more than the house is actually worth, in case they have to repossess it. And all those things require money to obtain, and people need to get paid. But if you stick to the end, I'll show you how to get out of those too. So let's go over the 4 types of loans that don't require any down payment. The first is an FHA loan, where you can get a family member to gift a down payment. Technically, it's not no down payment, but it's not coming out of your pocket. And they have to sign a letter saying that they're not going to demand you pay them back in the future. The second is through a down payment assistance program for first-time buyers. These can be structured in certain ways, such as a state, city, or nonprofit agency giving grants up to a certain amount for first-time home buyers. They can also be structured so that the whole down payment is given as a second loan, with various repayment terms. Some don't even require you repay them monthly, instead just deferring the whole down payment until you sell the house or refinance it in the future. And remember how I said those down payment assistance programs are only for first-time home buyers? Well, it's funny how they define first-time home buyer. A first-time home buyer, according to them, is someone who hasn't bought or lived in a house in less than 3 years. So if you bought a house, lived in it 20 years, and sold it more than 3 years ago, you're a first-time home buyer. Sounds great, right? Not so fast. They have both minimum credit score requirements and maximum income limits, meaning they're designed for low and middle income buyers who have a good history of paying back money they've already borrowed, such as student loans and credit card debt. The third way is a VA loan. VA loans for veterans have no minimum down payment requirement, meaning you can buy a house with no money down. But remember those closing costs I talked about earlier? Yeah, you still got to pay those. And for veterans getting a VA loan, you also have to pay something called a funding fee, which helps offset the cost of the VA loan program. And you have to pay that funding fee on top of other closing costs. And you actually have to have served in one of the branches of the U.S. military. The fourth way is a USDA Rural Development or RHS loan. Isn't that the agency responsible for food? Yes. But food is grown on farms in rural areas. And if you buy a home in one of the areas designated as rural by the USDA, you not only qualify for no down payment, but the closing costs are rolled into the loan itself. So there's literally no out-of-pocket closing costs for you. So if the idea of living in a rural area appeals to you, then you should definitely see if you qualify for this type of loan. The fine print. RHS loans are designed for people on the lower income side and cannot find affordable housing because they cannot get a loan anywhere else. So if you're rejected by everyone else, your best bet is an RHS loan. On the flip side, if you qualify for any other loan from any other source, RHS loans are not available to you. As promised at the start of this video, if you made it this far, you'd learn a super secret 5th way of buying a house with no down payment and no closing costs. And I sort of gave it away when I talked about the USDA loan. Basically, you can have your closing costs financed into the loan itself. That means instead of paying it up front all at once, you can have it included in your mortgage payments, spread out evenly over the length of your loan. Of course, the total amount borrowed must still be less than the maximum amount allowed by the loan type. You should be aware, however, that the less money you pay up front, either towards the closing costs or towards the down payment, the more money you are borrowing, the less skin in the game you have, the higher the risk you are. And to compensate for that added risk, the higher your interest rate will be and the higher your monthly payments will be. And the amount you borrow can increase your monthly payments, causing your new debt-to-income ratio to be too high to qualify for the loan. If you're wondering if you qualify for any of these loans or what you need to do to qualify, I'll get to that in a future video. Or you can email me.